A very warm welcome to you all, ladies and gentlemen, to this event here this evening. I think the idea of this event gestated in our minds, partly because of my knowledge of Regis Mutual Management's administration of one of their mutuals, the Livery Companies Mutual. And this is not intended to be an advert, but I know that it provides efficient, low-cost insurance, and especially a measure of discretion which reinforces that sense of mutual ownership and might be thought to encourage intelligent and proportionate insurance claims when taking a rather longer view than is sometimes the case. I'm very delighted that Regis are co-sponsors of tonight's event, and there's a certain amount of their literature around for people to see and take away. And in welcoming you tonight, I'm also very grateful to Rob Gordon of St Paul's Cathedral Institute, who is recording the proceedings and will make them available on the Institute website and also in due course on ours from St Mary Le Bow. The acoustic here can be somewhat demanding, and we have all the equipment to lick the acoustic, but occasionally someone hereabouts locally nicks one of our frequencies and one of the speakers goes suddenly and completely dead. So please don't be shy about alerting us if you can't hear, and we'll sort it out either personally or mechanically as quickly as we can. It occurs to me that mutualism has been part of the social history of my life and doubtless of yours as well. My brothers, all older I might say, can just about recall my mother's divvy number from the co-op in West Hampstead. Strange, but true. And like many of us, I benefited from, or if briefly and not very much, from the demutualizations of building societies and friendlies in a later generation. But lately my ears pricked up when a young Cambridge scholar, John Hughes, talking about the Pope and the Archbishop of Canterbury's responses to the economic crisis, suggested the following. Both figures formulate the ethical demand for the global economy in terms of care for the weakest, economic democracy or mutualism, and care for the environment which sustains us. And he says that the Pope and the Archbishop urge hybrid forms of commercial activity, such as mutualism, and much more besides, as civilizing of economic activity. Civilizing. That seems to me to be a bold project of reform, which has perhaps not been considered widely from that angle in these parts, and that grips my personal interest. Now, the format for this evening is that each of three distinguished practitioners will speak significantly, and then there will be some opportunity for response and question before refreshments. And what I'm going to do is introduce each speaker in turn rather than all at once at the beginning. And our first speaker is Dame Pauline Green, a former Labour and Cooperative member of the European Parliament, and a former leader of the parliamentary group of the Party of European Socialists. Following her re-election as an MP in 1991, Pauline subsequently retired from politics and took up position as the first female chief executive of Cooperatives UK, which she held until 2009. And her work included sitting on and responding to the recommendations of the Cooperative Commission. She was made a Dame Commander of the Order of the British Empire in 2003 for services to the cooperative movement and the development of the European Union, and was also President of the International Cooperative Alliance, until her election as President of the International Cooperative Alliance in November 2009. Now, this is the UN Year of the Cooperative, and Dame Pauline has been the UN ambassador, visiting every corner of the world, spreading the cooperative message, not least, I gather, the White House and the Hall of the People in Beijing. Dame Pauline.
Well, thank you very much. Good evening, ladies and gentlemen. As you've heard, I've spoken in some amazing places this year, but never before from a pulpit. So I hope very much that it's a good experience for you, and of course I hope for me too. But I'm very pleased to have the opportunity to talk to you this evening, particularly because this is the United Nations designated International Year of Cooperatives. And I hope you will forgive me if I make the assumption that your knowledge of the cooperative and mutual business model may be somewhat limited, and perhaps even less of you will have heard of the International Cooperative Alliance, which it's my very great pleasure to chair. And so I thought I would start just by talking a little about the ICA. So first of all, the ICA is the global body for cooperatives and mutuals that unites, represents, and serves cooperatives worldwide. Based in Brussels, the ICA has over 260 national members in 100 countries. And standing alone, those figures don't actually sound too grand. But I can tell you that many of our members are national representative apexes, which themselves have hundreds, some thousands, some hundreds of thousands of businesses within their own apex. And our combined worldwide business family is owned by nearly 1 billion of the world's citizens. And the ICA, through our business members, is the voice of 93% of that 1 billion. You know, just a few weeks ago, I was invited to take part in a BBC radio programme talking about the political and economic issues that the world is mired in at the moment. And we were asked about the state of the global economic and political environment. I was asked what cooperatives and mutuals can do to support the evolution of the global economy in its present difficult situation. And as I was describing the need for our cooperative and mutual model of business to be recognised, both as a key player in the global economy, but also for the current impact that we have on the real economy across the world right now, the interviewer said, okay, but that's all very idealistic. Well, ladies and gentlemen, that was a bit like a red rag to a bull as far as I was concerned, because 1 billion people are not starry-eyed idealists. 1 billion people can't all be wrong. And when 1 billion of the world's citizens have chosen to become a member of a cooperative, there must be something very powerful going on out there. And those people joined a cooperative because it puts food in their children's stomach, or provides electricity to their village, or they live in a cooperative house, or have managed to get insurance from the co-op movement when the traditional sector have refused them, or they market their farm produce through a cooperative, or work in a co-op shop, or save their money with a cooperative bank, credit union, or in Africa, a SACCO. And they use these organisations to help them put their micro-businesses on the next rung on the ladder of success, or to get their children through their schooling. There are many, many other ways in which local member-owned cooperatives are supporting individuals, families and communities in every corner of the world, in every village, in every town and in every city. Cooperative enterprises are often the linchpin of the real economy, but they are also successful global businesses with scale. And they can bring transformational change to the way in which business is conducted. In essence, they can help to build a better balanced global economy that puts people at the heart of decision-making, rather than, as now, so often leaving people at its mercy. So let me put this a little bit into context. We all know in this room that the global financial collapse, which saw some of the most prestigious leading-edge financial institutions disappear from the stock markets of the world, has led to a position regarded as quite unthinkable even 6 or 7 years ago. The leading economies in the developed world were forced to pump huge amounts of money, public money, into the struggling financial institutions in the hope of restoring the capital balances of investor-led banks, to allow a return to the status quo, bring equilibrium back to the global market, and facilitate investment-led growth once more. You will also know that so far this has not been an overwhelming success. Politically, at the last count, 17 prime ministers or presidents lost their office in the last 2 years on the back of this economic and political disaster. Thankfully, in my view, Barack Obama survived yesterday and didn't join that club. These political ramifications are the result of ordinary men and women venting their feelings against their national leaders for this wave of crises. Well, I can tell you that the financial institutions of the cooperative and mutual sector have come through the financial crisis stronger. Cooperative and mutual financial institutions have not collapsed. They have not needed recourse to public sector bailout, and the taxpayer is not having to support cooperative banks across the world. In Europe alone, there are 4,200 cooperative banks with 63,000 branches. These cooperative banks have 50 million members, or about 10% of the European population, 181 million clients, 780,000 employees, assets of 5.65 billion euros, and an average market share of about 20%. These are the findings of a recent report issued by the European Research Institute for Cooperatives and Social Enterprises, based at Trento University in Italy. Across the world, in the last couple of years, over 1 million people have voted with their feet, moving their money out of the commercial banking institutions and into cooperative banks and credit unions. This is just a quick thumbnail sketch of what's happening in cooperative banks in Europe alone. Cooperative enterprise across the world is already a very, very significant part of the global economy. The International Cooperative Alliance has, for the last 6 years, produced a publication showing the size and impact of our largest global businesses. The World Cooperative Monitor, which was published just last week, unfortunately, I didn't have enough to bring with me tonight, but this document, which you can find online, the World Cooperative Monitor, which was published just last week in Manchester, is drawn from a database of 2,200 of the largest cooperatives and mutual businesses. It shows that of that 2,200, nearly 1,500 have a turnover of 100 million US dollars. It also shows that the largest 300 businesses alone have a turnover of 2 trillion US dollars, equivalent to the GDP of Italy. And just to be flippant for a moment, shows that taken together, those global 300 businesses alone should put us comfortably in the G20. The 300 list includes many cooperatives from over 24 countries and from many sectors of the global economy, including banking, insurance, retail, health, housing, agriculture, and many more. However, those of us within the cooperative and mutual business sector know that our businesses are not just about the size of our bank balance. We are people-centred businesses. And whilst shareholder businesses are obliged by law to maximise their return to their shareholders, and therefore are compelled to look over their shoulders at the share prices and at investor pressure, We are duty-bound by our legislation and our globally recognised principles and values to give a good deal to our members. The difference between the two models of business could not be clearer. Of course, we must make profits, or as the founders of our movement in 1844 used to call it, surpluses, because our businesses must be competitive in the marketplace. But we do not need to maximise profits when it would compromise quality, or perhaps price, or our service to our members, most importantly. No wonder then that the worldwide cooperative movement is owned by nearly 1 billion people around the world, and together employs over 100 million of the world's citizens. In the European Union alone, there are over 160,000 cooperative enterprises, owned by over 100 million of the European Union citizens, employing 5.4 million Europeans and growing. In the UK, between 2008 and 2011, the number of cooperative businesses grew by 23%, and in 2011 alone, by 8.9%. And those businesses are owned by 13.5 million British citizens, once again growing by 5% alone in 2011, and by 19.7% between 2008 and 2011. And what of the cooperative economy, the UK cooperative economy? Well, the UK cooperative economy has outperformed the UK national economy for the 4th consecutive year. It has grown by 19.6% since 2008, while the UK economy in 2011 is 1.7% smaller than in 2008. So, we believe that it's perfectly viable to argue for a better balanced global and European economy that values forms of business other than just the company model. We want global decision makers to embrace a global economy with a greater plurality of models, including ours that puts people at the heart of the decision making. And at a time when young people, whom this recession in so much of the developed world is hitting so cruelly, and when you think that 53% of young people in Spain are unemployed, when you think what that could do to the fabric of society in Spain, when young people are cynical of the political and economic models that dominate their lives, when they're looking for a voice, and we've all seen and heard it, in North Africa, in the Middle East, in the Occupy movement that started in Wall Street and spread around the world quickly, and when they're looking for something that will actually give them an impact, an engagement, and fairness, the cooperative is not only an effective governance model, it is a compelling one. So yes, we believe that cooperatives represent a different way of thinking about the global economy that can bring transformational change to the way business is conducted. 2012, this International Year of Cooperatives, has achieved something quite remarkable, something never before seen in the global cooperative family. It has achieved a massive shift in our sense of cohesion and confidence. I think for the first time in our history, which is now 170 years old, the whole global movement has coalesced around one logo and slogan, that produced for us by the United Nations and launched at the UN's General Assembly in New York last year. And the slogan, "Cooperative enterprises build a better world," doesn't challenge anybody's individual branding. It actually adds value to the quality of our principles and our model of business. Each national movement across the world has come to realise with both heart and head that it is part of a massive global family that is already a very significant part of the global economy. I'm sure you will recall from your history lessons, ladies and gentlemen, that the cooperative model was born in a tiny shop in Rochdale in the northwest of England during the Industrial Revolution. I think we can argue, when you look at the size the movement has grown to from that tiny little shop, which is now a museum in Toad Lane, Rochdale, I think we can argue that the cooperative model of business is the best ever British export, but also probably, and most significantly, I think, it is the single best ever initiative to take people out of poverty with dignity, and a business initiative at that. Just to show, perhaps, and to illustrate what's happening in some of our businesses around the world, I'd just like to give you 2 or 3 little stories that will give you some sense of what our members have done and are still doing to change lives through business. The Indian Farmers Fertilizer Cooperative, IFCO, was established in 1967 with expertise from the National Cooperative Business Association of the US, supported by US aid. It's now one of the largest fertilizer businesses in the world, owned by thousands of small Indian farmers. IFCO is now moving beyond its Indian borders and creating partnerships in many parts of the world. Just last month, in Quebec City, at the World Cooperative Economic Forum, IFCO and Co-op Fédéré, a major agricultural cooperative in Canada, announced a 1.3 billion Canadian dollar investment in a fertilizer plant in Quebec, a joint transnational cooperative venture. Then there's the Gujarat Cooperative Milk Marketing Federation, now widely known as AMUL. Established in 1965, AMUL was recently voted as the brand with the greatest household recognition in India, beating all the multinationals into a cocked hat. AMUL is owned by more than 3 million small dairy farmers, who've now elevated India to be the largest producer of milk in the world. AMUL was founded as a way to bring a decent and fair livelihood to the households of thousands of Indian dairy farmers, mainly women, by the way. It was the umbrella under which small Indian dairy farmers were able to build their economic identity and power. AMUL is now an iconic Indian brand and is very much part of the fabric of Indian business, and now is exporting its brand to the Middle East, Africa, Asia, and most recently to Australia. My last little story is about the electric cooperatives in the United States. Most people don't think of the United States when they think of cooperatives. But 75% of the US landmass is covered by electrical cooperatives, and they serve 42 million US households. Such is their commitment to their member-owned business model that they've successfully worked to build electric co-ops in many countries across South America. And most recently, they've been doing what I think is some most inspirational work, bringing electricity to Bangladeshi villages for the first time, assisted and supported by US and UK development aid, training the villagers on how to run their cooperatives, and vesting ownership of the cooperative in the villages in perpetuity. Let me just add to these stories by telling you that cooperatives have been growing in double-digit figures in China for the last 11 years. And according to the Deputy Prime Minister of China, with whom I've met twice in the last 2 years, cooperatives are a crucial part of the next 25-year plan to improve the lives of the 600 million Chinese who still live in rural poverty. Actually, when he told me that, I got stuck on those 2 numbers. For somebody who's been a Western politician, to think about a 25-year plan is completely something completely new. But then you look at the figures, 600 million people in rural poverty, and what cooperatives could do to support a better living for them. In Brazil, cooperatives run through the economy like the word Blackpool through a stick of rock. They pervade every part of the Brazilian economy, and are pursued with energy by the Brazilian government. I could go on with such examples, particularly from what I call the airplane economies, the emerging economies whose economies are taking off very dramatically. Needless to say, and I think the point of giving you some of those examples is, needless to say, the visibility and success of the cooperative and mutual models throughout those emerging economies is a source of enormous political strength to the cooperative and mutual global voice, particularly given the shift of economic and political power across the world and the growing influence of those emerging economies in organisations like the G20, informal organisations that are actually directing the way in which the global economy will develop. Ladies and gentlemen, as 2012 draws to a close, our cooperative businesses across the world have committed themselves to making sure that we do not lose the huge momentum that we have built up during this year. And last week in Manchester, we had the final event for our movement, 10,000 people coming from around the world to take part in a huge event, not just in celebration of cooperatives, but to do business together through an ICA Expo that saw countries from movements from 50 countries exhibiting their wares, but also through looking at the ideas. We had a marketplace for commerce and ideas and worked together to develop our ideas to take the momentum of this year forward. And we published last week, on the 31st of October, exactly 1 year after the launch of the year at the United Nations, our blueprint for a cooperative decade. The blueprint, which, once again, I'll wave about because this is the draft that was agreed last week. The formal paper will soon be out, but the blueprint sets out the high-level strategy for the global movement for this decade until 2020. And our commitment is that at the end of this year, we will not just pat each other on the back and say, great year, but rather we have an ambitious agenda. We will be working together so that by 2020, cooperatives and mutuals will be the fastest growing model of business in the world. Ambitious? Yes. But if there was ever a time for an ambitious agenda, it is now. Thank you very much.
Thank you very much. Dame Pauline's distinction is our second speaker, Shaun Tarbuck, who is the Chief Executive of the International Cooperative and Mutual Insurance Federation. A qualified accountant from 1987, he has worked in the insurance industry, in corporate finance, and as a finance director for a life insurer in Manchester. He then set up his own insurance consulting and accounting practice before joining ICMIF in 1995 and becoming chief executive in 2005. He is, interestingly, a board member of Regis Mutual Management, and he's UK Mutual Trade Association, AMI. He regularly speaks at conferences on mutuality, demutualization, marketing, mutual and cooperative insurance sector. Shaun.
Thank you, George. It's always a tough act following Pauline. She's so good, but I will do my best. When I was looking at the history of this wonderful church, it struck me as how the church's history and the mutual insurance history is actually quite entwined. St. Mary Le Beau was first mentioned in 1087. Mutual insurance started with the guilds back in the 11th century, mostly in the Viking countries as well as in the UK. The Great Fire of London in 1666 razed this church to the ground, rebuilt then by Sir Christopher Wren. The same fire marked the beginning of the mutual insurance sector as we know it today, and started what they call the hand-in-hand societies. Hand-in-hand because they passed the buckets to put the fire out. Many of those early hand-in-hand societies were community-based mutuals and friendly societies. And then the famous bells here were restored in 1905, at the same time as the pinnacle of the mutual insurance influence in the UK, which then had 80% of the working population being a member of a friendly society, which mutualised their health, their welfare, and their death benefits. Now, mutuals are a broad church, to use the pun. We call them member-owned businesses. You'll know mutuals, you'll know cooperatives, you may know friendly societies. In America, they call those fraternals. They have reciprocals. The new Islamic form is called takaful insurers. All of these have one thing in common. They only are there for their customers and their members. That's their commonality. That's what brings us together as ICMIF in the mutual insurance sector. And then if you think about it, insurance is, by its very nature, is actually a mutual. It's the coming together of a group of individuals to share in life's big risks, whether they be loss of property, death, health, but the concept of spreading the risk of a significant loss of a few between many is effectively what insurance is, which is why the history of mutual insurance predates the history of commercial insurance. Now I'm going to look briefly at the globalization of the cooperative and mutual movement. Pauline talked wonderfully as this being our greatest export, and I do believe it is. But as she said, I'll repeat it because it's a stat that takes a while to sink in. 1 billion people are members of a cooperative or a mutual globally. That's 3 times as many as there are shareholders. So this is a populist form of enterprise that is vital to many global economies and not, as some people seem to believe, is old-fashioned and outdated and ideological. Pauline mentioned the top 300, but if you look at that world report that she showed in front of you, all of the 2,000 co-ops and mutuals in there actually account for $2.5 trillion in turnover. This sector collectively is larger than the GDP of the UK. That puts us 7th largest economy in the world. That's not small. In the mutual insurance part of the cooperative movement, we are actually the largest part. We're 28% of that total market, closely followed by agriculture at 26%. Some of you may know some of the large American agricultural co-ops like Land O'Lakes or Ocean Spray. You may use their products. And then the third largest is retail at 21%. And I'm sure many of you shop in John Lewis or maybe even the Co-op Group. So they're well-known brand names. And since the global financial crisis, mutual insurers have been the fastest growing part of the insurance sector. In 2007, they were 23.7% of the global market. In 2011, we are now 26.3%. So we have actually gained 2.6% of the global mutual market in only 4 years. That's quite remarkable. They actually have a total premium income of $1.1 trillion, 55% life, 45% non-life. We represent 28% of the non-life insurance market and 25% of the life. And that's how the 26% is derived. We have over $7 trillion in assets and employ nearly 1 million people. Some big stats, not a market you can ignore. In 5 of the largest 10 insurance markets in the world, mutuals have more than 30% market share. USA, 34%, Japan, 42%, France, 39%, Germany, 44%, Netherlands, 32%. And in 8 out of the top 10 insurance markets in the world, mutuals increased their market share last year. So who are the big players? Well, the largest 20 mutual and cooperative insurers in the world have representations from 8 different countries. USA have 9, Japan have 4, France have 3, Germany, Netherlands, Italy, Spain, 1 each, none from the UK. Zenkuren is the Japanese agricultural insurer, which actually has a premium income of 70 billion US dollars. It's the largest. State Farm, you may know of, in the US, has 57 billion. Nippon Life, again in Japan, 55 billion. And others you may recognize in the largest 20 would be Liberty Mutual in the US, Nationwide in the US, Achmea in the Netherlands, Groupama and Covéa in France, R&Vau in Germany, Unipol, Italy, and New York Life. If you look at the regional split and the UK split, in all 5 continents, the mutuals have seen significant growth in their market share since 2007. So this isn't just in the larger companies, it's all over the world. If you look at Europe, we've gone from 22.6% in 2007 to 27.5% in 2011. That's nearly a 5% market share increase. This growth in business has led to a growth in employees in our sector, as we now employ 75,000 more people just in Europe alone than we did in 2007. That's a 25% growth in employment. We're doing our bit for combating youth unemployment. All of these data, and we've bought some brochures for you. It was only released last week. There are some down here. Please help yourself to them. You'll find all of the stats and a lot more information if you want on our sector. Ironically, of the largest 10, it is the UK that is the fastest growing, almost doubling its market share from 3.9% in 2007 to 7.3% in 2011. Why do I say ironically? Well, because in the past we have demutualized a lot of mutuals in the last 20 years. 20 years ago, mutuals probably had about a 30% market share in the UK, similar to the other large markets. The demutualization fad has now been shown for what it is, i.e. it was a fad and it was driven by greed. We're not really seeing many of these. In fact, what we're starting to see now is remutualizations. UK, US, Australia, there's been more of a trend now towards remutualizations. Who are the big players in the UK, I hear you ask? Some of them you may know, some of you may not. Royal London, LV, NFU Mutual, the Co-op, Ecclesiastical, Simply Health, Engage Mutual, Wesleyan, MGM are just some of the names you may know. 3 of these, LV, Engage and MGM, have grown their premiums by in excess of 200% in the last 4 years. And then you have some of the ones you may be better known in the city here with the P&I clubs and also the discretionary mutuals, which Paul will talk about in a minute. So, why are we seeing a shift towards mutuality? Well, one factor is definitely the lack of trust in the stock companies, who are seen as a big contributor towards the global financial crisis. The other is a greater awareness of what and who a mutual is, and a move towards what David Cameron at the beginning of the year termed responsible capitalism. Let me post a question to you. What will a winning insurer of the future be? I'm thinking 10 years out, maybe even 20 years out. I'll answer that question and then maybe we can debate some of these later, but in my view, the winners will be those that actually have a values-based strategy. And all insurance companies are now scrambling to say, we've got a values-based strategy. It'll be those that can communicate, engage with, listen, and respond to customers and members, ensuring that customers are at the heart of their decision. It'll be those that are in tune with the changing responsibilities of organizations, i.e. embedding the social, environmental, and ethical issues in their strategy, and not just the financial side of the business. It's the triple bottom line that is coming in. It's a given now that they're going to be professionally run businesses that are fair and they're transparent. And that fairness is certainly coming in the insurance industry. We've had the treating customers fairly from the regulator for a number of years now. That is actually starting to expand all around the world now. So the fairness and the transparency is key. And if you do all of those 4, then you've got to really create the culture within the organization that will actively encourage all of the above. And that's not just from the CEO. It has to be from CEO down to the receptionist, and everyone has to make that belief. And that's a difficult thing to create, that right culture. then ask yourself, well, who is doing this? Well, I'd like to think our mutuals are, which would explain their growth. But really, this is a strategy for a good business, whether it's a mutual or not. And everyone is going to start to be doing this if they're not already. So hopefully we've got a bit of a head start on this, and hopefully this is one of the explanations why we're doing so well. Here today, it's when we had our cooperative meeting, 10,000 people last week in Manchester, it was really the cooperative people that were involved. What we need to do and what we've agreed, and Pauline's taken this as one of her big challenges, is to externalise our message. So this is talking to people who are not aware of the mutual and cooperative form, who are maybe not as passionate about it as we are. But it's pleasing to see that if we look at other key stakeholders in the industry, such as the MPs or MEPs, this is what's been happening in the last year or so. All the UK's main parties now include mutuality in their manifesto. That was 2 years ago. Now things are really starting to move on now. And we've got David Cameron, at the beginning of the year, announced the new Cooperatives Bill in January. The Coalition has just appointed David Halfran, a senior advisor to Number 10, as the head of their behavioural insight team, with a remit to promote mutuality within Number 10. The Welsh Government Minister, Andrew Davies, was announced as the chair of the Welsh Cooperative and Mutuals Commission in July. Will Hutton chairs the Ownership Commission, looking at employee ownership. The Mutuals Task Force, set up by the Cabinet Office in 2011 and chaired by Sir Francis Maude, issued a report stating that mutuals were high quality businesses, recommending mutuals be used for delivery of public services. And so the list goes on. The politicians love our form of governance. At the EU level, a report is about to be published within the next week or so on the role of mutual societies in the 21st century in Europe. A wide-ranging EU report that's been a year or so in building and focusing on the three main mutual industries in Europe: insurance, health and banking. And it's hoped that from this it would lead to the EU actually giving us a European mutual statute which will act as an enabler for further growth in the sector. The media are important to us, particularly the business media, and accepting our business model. I'm sure most of you are avid readers of The Economist. It ran a story this week on cooperatives, mostly focusing, admittedly, on the cooperative group, but there were several of us, Pauline and myself included, who weren't quoted in there, were we? But others were, and we hope that's going to be a start of a trend towards understanding us. 2 weeks ago, they majored on true progressivism, a term they titled which sort of describes or is used by them to highlight the growing inequality in the world, and stating that progressive governments will be those that match equality and growth. I would say this is our specialism. This is what we do. The Financial Times has also run a number of features on co-ops and mutuals recently. So the major business media are starting to understand our sector and the values it brings to both business and to economies. The industry is important, and this is why we're talking to you today. Global reports have been published by McKinsey, Deloitte, Ipsos, PwC, just within this last month alone, just on our cooperative and mutual sector. McKinsey's global managing director, Dominic Barton, when he was one of the keynote speakers at our cooperative summit in Quebec last month, actually said, summarizing his report, he said, "The time has come for the cooperative model to be put forward and celebrated." He called for a shift in the business world from a focus on shareholder values to stakeholder values, and strongly criticised the short-term approach of conventional business driven by the need to post good results every quarter to keep shareholders happy. Quarterly capitalism does not lead to good results. The short-term pressure is toxic, he said. That's from McKinsey. ICMIF introduced a new supporting member programme 3 years ago. We now have excellent partnerships with Willis Re, with AM Best, with Partner Re, Clyde & Co, Quindel and Invesco, All of these wonderful organizations, global organizations, recognize the mutual insurance sector as part of the insurance industry, and they all provide services and research all tailored towards the mutual sector. And this is really benefiting because they're starting to get more business from our particular sector. And it's a two-way street. So in conclusion, the mutual insurance sector has refound its voice, or its mojo, as The Economist said. It's growing and is more and more influential. In every country I go to and ask who is the most admired insurer in that country, 9 times out of 10, it's a mutual or a cooperative. And we have members in 75 different countries around the world. And as Pauline said, and I'll reiterate it because it's worth saying again, it is a big, hairy, audacious goal, but we do plan to be the fastest growing form of business enterprise by 2020. And the insurance sector plans to play its part in doing this, which sets up Paul Koronka perfectly to tell you how we're setting up new mutual insurers. Thank you.
Shaun, thank you very much. Our third speaker is Paul Koronka, who operates under the misfortune of being a very good friend of mine. He's also actually a dedicated organist, and so would be well placed to make an unusually versatile contribution tonight. However, perhaps not. He's an Oxford Law graduate and started in mutuals very early in his career, working with the West of England P&I Club for ship owners and the TT Club for international multimodal business. He spent 9 years working with Charles Taylor plc as chairman of their non-marine mutual division, where he was responsible for starting or managing 8 mutuals over that time. In all, he's been involved with 14 mutuals over the period of his career. In 2007, he and a colleague founded Regis Mutual Management, and Paul has been CEO since its inception. And Regis specializes, as we shall discover, in establishing and managing mutuals in different arenas. Paul.
Thank you very much, George. My part of this presentation is to look at the formation and creation of new risk-bearing mutuals. Most of the issues involved in starting this type of mutual also apply in one way or another to other types of mutual. Now, as we've heard, 10 years ago, the public perception of mutuality reached a nadir with the full-bore demutualization of our building societies. Most of this, as you've heard, was driven by greed. Greed of the management of these organizations and greed of the advisors and funders. Almost all of the mutuals that demutualized disappeared in a puff of smoke when the going got tough. But there's another reason, apart from the paltry cash inducement that the members received, why the general public, who were the members of these societies, acquiesced in these demutualizations. And this, I think, was the absence of any strong glue between the members. For most, the sole reason to be in a mutual organization was to get the best rate or some very other short-term benefit from an organization they could hardly distinguish from any other on the high street. As I will suggest later, if there is no strong glue between the members, no identification with each other, or no obvious common denominator, then the foundations will inevitably be very weak. Today, undoubtedly, there is an increasing interest in mutuality. And this is partly driven by disillusionment with the financial services industry in general, and partly by a revived interest on the part of politicians. Disillusionment because people still remember the aftermath of 9/11, when the traditional insurance market couldn't even cover the local pony club for its general liability cover. The best one can say is that traditional industry is cyclical, which is in itself a good reason to find something more stable. Most of the interest that we see is coming from either the corporate or institutional world, with one or two exceptions. In other words, it is industry or group specific. And the problem is always how to convert this interest into new mutuals. In my view, the two critical factors have traditionally hampered the creation of this type of mutual: capital or funding and indecision. Capital, because there is usually no other source of funds other than extracting money from the prospective members. Indecision, because some see it as a leap into the unknown. Best not to be first. Best a follower rather than a leader. And that's quite natural. But if everyone did that, then nothing would ever happen. Of course, there could be a catalyst, such as an adverse circumstance that leaves little option but to try the do-it-yourself solution. I must stress here that mutuality is not for everyone, and we must be careful not to convince ourselves that it is. However, the inherent characteristics of a properly formed and well-structured mutual are very appealing. The principal qualities I'm talking about are, of course, number one, efficiency, cost. Why on earth would you start it unless it was going to be cost effective? Control is another vital factor. Control comes through ownership. Transparency, it's not something one can really say about the traditional industry. And being member-focused in everything it does. There is also the ring-fencing aspect from either hostile markets or substandard operations or risks, which a selective mutual obviates. Careful selection of members is vitally important to the successful operation of every mutual structure, particularly when it is bearing risk. The 80-20 rule applies here as it does in so many other walks of life. 20% of your prospective constituency will produce 80% of your claims. So you know what to do. However, it is the members who must decide who they are prepared to do business with, not the suits in the city. I could go on to mention other things like longevity, stability, purposefulness. Mutuals have a usefulness and a purpose beyond just simply making a profit. And with a risk-bearing mutual, the scope of coverage and the flexibility to use discretion to help members beyond the strict letter of the cover is one of the most important features and most appreciated features of mutuality. Most of these latter benefits are, of course, intangibles, but they are nevertheless important benefits that are difficult to value until they are actually experienced in practice. So how do we overcome these obstacles? Now, in terms of risk-bearing mutuals, there are three types of mutual requiring consideration. The first is the fully authorized mutual insurance company, capitalized in accordance with the European directives and authorized and regulated in this country by the FSA. Now, this is a very expensive path to follow, and this is all the more so with the additional burdens of Solvency II, increased capital, just around the corner. The other two types of mutual are the ones that we are increasingly using. They are both forms of discretionary mutual. The first is completely discretionary, and the other is what we call a hybrid, involving both a discretionary element coupled with some traditional insurance. Now, I must explain to you what a discretionary mutual is. In essence, there is no contract of insurance. The only thing that is guaranteed is a right to have your claim considered. And this may sound very scary to the uninitiated. However, that discretion as to whether to pay a claim or not is controlled and driven by the members through their elected board of directors. And this is still valid, even though every member expects that all valid claims will, of course, be paid. It then seems a bit more palatable, particularly when you learn that the discretion to pay valid claims is always coupled with an ability to pay claims that fall outside the usual ambit of traditional insurance cover. In other words, it is extremely flexible and operates under the control of the benefit of the members and for the benefit of the members. And it is this focus on the members' interests that is so vital. I will come back to that issue again in a moment. Now, there are some very sound examples of discretionary mutuals going back well over 100 years. The two doctors' mutuals covering medical malpractice are two very good examples, as are the two university mutuals in the UK. The other model I referred to was a hybrid model. And this combines the discretionary element for attritional losses with an insurance policy sitting above, with all members named as an insured on that policy. And this can represent the best of both worlds, since all members can say that they are indeed insured, subject to a high excess, which is protected in their discretionary mutual. This is almost always coupled with a further aggregate insurance protecting the mutual itself from an unexpected accumulation of claims within the mutual's retention. Sounds very complicated, but it's quite important to understand how it's constructed, as I'll come on to in a minute. Now, this represents an ideal partnership between the ideals and aspirations of mutuality and the strengths of the traditional insurance market. Naturally, getting the balance between risk retained in the mutual and risk passed to the insurance market is the key to the efficiency of the structure. And those insurers in the traditional market that support mutuals like the business because it is clean business, and they know that the members have a huge incentive to instigate loss prevention and risk management initiatives that will save both parties money in the medium to long term. Why would anyone anyway want to insure attritional losses? Question for the market. Attritional losses are the expected losses of any particular group of members. So if they're expected, they're a business risk and should be taken by the businesses concerned. And the mutual is an ideal vehicle to absorb all those expected losses of a particular group of members and to write that business at as close to cost price as is possible to achieve. Now, I've talked quite a bit about the members. There's been much talk from all sides of the political spectrum over the last few years about mutuality and the answers it may provide to many of the issues we face. However, there seem to be one or two basic misconceptions in our particular area. The most glaring, in my view, is the absence of any analysis of who exactly should comprise the members in any particular area of activity. This applies particularly to the type of mutual that we're talking about here. In my analysis, it's very clear. The members must be the ones who are the ultimate beneficiaries of the service being provided by the mutual. There's a whole body of case law devoted to what is mutual trading. Much of this case law is tax-related. However, it makes perfect sense. Those who have the primary interest in any particular activity should be both the members and the beneficiaries of mutuality, whether related to the provision of services, products, or financial benefits. I'm now going to mention, if I may, a couple of existing mutuals started over the last few years as examples of what can be achieved using these mutual structures, and then mention two which are in the offing as examples of what can be done and what obstacles need to be overcome. I'm going to start very close to home with one that's already been mentioned, the livery companies mutual. Now, livery companies are not known for being trailblazers in many things they do, or indeed in anything they do. However, they were able to embrace the concept of mutuality very quickly indeed. Their mutual started in 1999 with just 4 members and has expanded steadily, covering now most of the companies with halls and investment properties, and has recently admitted several prominent London clubs and other distinguished institutions such as the Royal Society, the Merchant Ventures of Bristol, and the Queen's Bodyguard in Scotland. Now, the mutual is minuscule in comparison with the size of traditional companies or banks, and yet it has an influence and significance way beyond its comparative small size. The mutual protects members for all their property risks, including those magnificent halls, all their treasures, their investment properties, as well as their liabilities as property owners and employers. The mutual protects just under £2 billion worth of property, mainly here in the city, and has made a surplus every year since inception. That surplus is now considerable, and part of it is being returned to members every year. And to give you an example of the range of surpluses, these have ranged between 13% and 33% of members' annual contributions. Now, the livery companies mutual is a hybrid. In other words, the mutual bears a proportion of each risk and then arranges an insurance policy sitting above, with every member named as an insured on that insurance policy. In this way, the member companies can be assured of the security of their security in the event of a major loss, at the same time as being able to generate substantial surpluses. And that is, of course, providing they keep the claims under control, which I'm very pleased to say so far they have done so. They have an average loss ratio of less than 15% over a 10-year period. But if the mutual did have a rogue year for claims, the maximum downside is taken care of by that aggregate insurance that I mentioned earlier. So the mutual's exposure is limited to a finite sum, which is covered many times over by the retained surpluses. So in fact, we have no capital in the traditional sense, because we don't need it. We are buying the capital backing from the insurance market in a partnership, and we're paying for it. And that has worked very well, because the attritional losses, which is what the mutual takes, is the most expensive part of any insurance program. By retaining that and by controlling the losses, the mutual can still make very substantial surpluses. The second example is a fully discretionary mutual on a slightly different scale, much larger, although still very small by conventional standards. And this is Unimutual in Australia. Now, Unimutual has been going for just over 22 years. It is fully discretionary, and it now protects $50 billion worth of properties across 23 Australian universities, together with their full liability programs. And those liability programs includes not only the general liability programs, their very extensive professional indemnity program, the medical malpractice cover for their teaching hospitals, and all their clinical trials, and terrorism as well. Now, the capacity required is very large. And this fully discretionary mutual provides property cover up to $1.2 billion per member. So it's an enormous amount of capacity provided on a fully discretionary basis. Now, the mutual has settled over 7,000 claims since it started and paid over $200 million worth of claims. And 60 million of that has been paid out in the last 2 years alone. You've all heard of the terrible disasters that have struck the Australian continent over the last 18 months. Fires, floods, hailstorms, windstorms, you name it, they've had it. Now, this mutual does have the ability to call up additional funds from members if required. And they can call up 50% of their annual contributions. However, it has never had to do this in practice. Although it has returned some surpluses to members, it aims to run on a small surplus, protecting its downside again with an aggregate stop-loss arrangement with the insurance market. So this is another prime example of partnering with the insurance market, or in this case, the reinsurance market, to get a more efficient outcome for both parties. Now, the board of directors of that mutual really recently requested us as managers to produce a plan for a doomsday scenario. What happens if there is a global economic meltdown, with banks collapsing first, closely followed by key insurers? How could Unimutual survive with no reinsurance? Well, the answer surprised them. Unimutual could not only survive, but the capacity that could be generated collectively with a little bit of restructuring was quite significant and probably adequate for most 1 in 100-year events. The members collectively have a turnover exceeding $25 billion a year, i.e. larger than all but the largest of insurance companies, and of course that was backed by $50 billion of property assets. Now, I'm now going to take a terrible risk by mentioning two mutuals that are in the pipeline. They are still projects on the drawing board, but I'm going to do so because they're fairly close and they're interesting. One is very close to beginning a startup phase, and the other we're hopeful it will gain traction in the first quarter of next year. The first relies very much on the glue principle because it is a personal lines mutual for the military family. Now, the members of this mutual will be the serving military, the reservists, and the veteran community and their immediate families. And by immediate families, we mean parents and children. And the total roll call of this military family in this country is a staggering 10 million individuals. That there is sufficient glue almost goes without saying, as this is a relatively tight-knit community who are used to supporting each other through thick and thin. The objects of the mutual are to support the military covenant as far as the serving forces are concerned, and to deliver the usual mutual benefits to all members. Now, to service a mutual of this type requires an expensive infrastructure in advance of starting up. And the funds for this venture have been sought from private sources. And I'm pleased to say that our target has been fully committed to, and that 80% of the required funding has already been deposited in a special purpose vehicle. The funding is being provided by way of a subordinated loan to the mutual. And this, as you can imagine, is extremely rare in this economic climate to be able to raise any form of subordinated debt. Some of the covers will be white-labelled, and some will be on a mutual hybrid basis. Now, in conceiving the mutual for the UK military family, much comfort has been drawn for the experiences in the US. In the US, there are two military mutuals in operation, one for life, health, and welfare benefits, the other for general insurance. The first one was born after the Battle of Little Bighorn in 1879, and it was the origin of the expression, "pass the hat round," which came about after cavalry skirmishes with the Indians. A hat would be passed round for the widows of dead cavalrymen. However, after the great battle, there weren't enough cavalry left to pass a hat round to, so the hat was passed round instead to the whole army, and the Army and Air Force Mutual Aid Association was formed. The other US Forces Mutual, which is a general insurer, The USAA has over 20,000 employees and many billions in reserve. The final mutual project that I want to mention tonight is rather different. Its proponents have used the acronym MAST: Money, Advice, Support and Training. We've been working with the Town and Country Housing Group in Kent to pioneer this mutual approach. The mutual's members will be a select group of registered social landlords or housing associations to you and I, members with similar profiles in terms of housing stock levels and resident profiles. And the mutual will have two principal objectives. First of all, to provide financial protection to members against the cost of tenancy failure, and secondly, to provide a service to members which significantly reduces that cost and volatility that's associated with those failed tenancies. In my view, the way this mutual will accomplish the latter is a very interesting application of mutuality at its best. In this mutual, the service to members is absolutely integral to the concept of and success of the mutual. This service is designed to reduce the incidence of failed tenancies and thus reduce the overall cost to the members. The issue of failed tenancy is one of the major issues facing housing associations today. When a tenancy fails, the costs can mount up very quickly. There's obviously the loss of rent, the cost of remedial work that usually ensues, the cost of dealing with any associated antisocial behaviour, and ultimately the cost of eviction if all else fails, rent arrears and costly remedial works. We're dealing here with one of the major issues facing society today, people at the bottom of the rung. And just providing financial protection for the housing associations concerned would be quite difficult on its own. However, coupled with early intervention, it can be done in a way that saves considerable cost and gives greater budget certainty to the individual member housing associations. And underpinning this whole concept is a very firmly held belief that potential tenancy failure can be identified early on before it becomes an intractable problem. Failure to pay rent is an obvious sign of financial difficulty, but there are many others. Losses of job, family crises, neighbourhood conflict, domestic abuse, illness. And having identified the early signs of potential tenancy failure, the mutual, through its managers, will deploy well-trained support experts to assist the tenants to deal with their particular issue or issues. And these experts will include people like money advisors, learning skills and employment experts, to name a few. And the savings that mutual members will make will far outweigh the cost of this intervention and should lead to a marked reduction in ultimate cost. And of course, significant savings will also accrue to the health service, the police, the prison service, the courts, and to society as a whole. The theory behind this approach has been well documented through some major academic studies, both here and in the UK and in Australia, and most importantly, through practical experience. I mentioned earlier about a doomsday scenario. Of course, we are all hoping that a financial meltdown will not occur. However, if it does, then it is something we don't fear in the mutual world, because mutuals might then be just the only thing in town. Thank you.
Well, we've enjoyed three very thorough philosophical and practical discourses there, and there's now some time for us to have comments and questions if people would like that. I'm sure that people should have a drink shortly after 7:30 at the very latest. Matthew will be moving amongst you. I can't even see Matthew. He's there somewhere, is he? Matthew, there he is, will be moving up amongst you with a microphone. You need to hold the microphone quite close to your mouth and relatively sort of horizontal to your mouth for the frequency to work well. Can I invite any questions or comments? Sir.
My name is Teddy Watson. I'm interested, having worked over many years with mutuals and cooperatives from the lightning rod mutual in America through to various Japanese mutuals. I've also become involved a while back in some Islamic insurance operations. And we've had one mention of takaful insurance. I'm intrigued by whether any of the associations we've talked about this evening have developed relationships with some of the Islamic insurance operations around the world, and what they see the potential in that development if they were to take such a relationship forward.
Thank you. Perhaps we'll take another one or two comments or questions before we have that answered. Anyone else want to say something at this juncture? Who would like to answer that? Far away. Yes.
That'll be me. I think I was the one that mentioned it. Yes, takaful insurance, as you said, is the Islamic form of cooperative insurance. There are two models. One is the Sudanese model, which obviously came from Sudan about 25 years ago, but also the more hybrid ones that are more popular now out there, which have capital supplied generally by a larger organization, but then have the Sharia compliance and the Sharia board. It is a very interesting concept. To me, it is a very big growth area. We have about 25 of our 220 members are takaful insurers. We pick and choose the ones that are cooperatively minded, because there are some out there that aren't, even though they're meant to be. And this is the challenge in what is a very new area of insurance, or a new affinity, if you like to call it that. Having said that, though, it does date back to about 1397, I think, for the very first takaful insurers. But it's really new to most of us. So we are seeing a lot of growth. We are very connected. We're probably the only global organization that pulls them together. There are two other organizations, GTG and FIOTG, and we are doing lots of things together that try and bring the 80 or so takaful insurers into one particular global forum to try and make sure that the cooperative spirit stays within the takaful insurers, because that's the challenge for us. Some of them are going away from that and taking far more shareholder benefits and a lot less for their cooperative constituencies.
Another comment or question there.
My name is Hugh Rosenbaum, and I have an interest in captive insurance.
Slightly closer to your mouth, if you would, kind.
My name is Hugh Rosenbaum, and I have an interest in captive insurance companies. And one of the failures of captive insurance companies is to cooperate with each other. My question to you is, do mutuals get together and replace the reinsurance industry in protecting each other? And if not, why not?
And perhaps that could apply also to other forms of cooperativism as well.
Sixth principle first.
Me? Okay. First of all, the cooperative movement across its business sectors is all of us subscribe to a set of principles. The sixth principle is cooperation amongst cooperatives. And it depends where you are in the business cycle. Let's be frank. Over time, there's been periods in this country where the cooperative movement didn't cooperate and didn't move. But that's not the case at the moment, and there's enormous cohesive action where the benefits of coming together in that way are so clear and so obvious that it's beginning to grow apace, and it's happening now cross-border. So across the world, we've seen, as I said earlier, this great cohesion, increase in our cohesion. The desire, for instance, in Manchester last week, there was a meeting of the leaders, the CEOs of and presidents of some of the largest consumer co-ops in the world to see how they can start exploring more effective ways of sourcing goods together. Now, the impact of that could be huge, but perhaps Shaun wants to comment on insurance in particular.
Yeah, from the insurance side, ICMIF is basically there to provide a service to make its members more competitive and grow. So we're a best practice organisation of essentially chief executives and senior managers. So our role is to make sure they do cooperate, and they do considerable amounts of cooperation between them in terms of sharing strategic best practices that actually work. And we've proved that even in the last 4 years. Our particular members have grown in their premium terms 16%, when the market has only grown by 1%. So it is working if you do share those. And we can share it because they're not competing usually. They're not in the same space, they're not in the same country. So that is one of the challenges. And just to come back to the reinsurance side, there's a wonderful example of our Latin American members where 13 countries have pooled together to group buy their reinsurance. And now those particular 13 organisations are growing at something like 25% a year on average for the last 5 years, because the reinsurance has enabled them to make that growth, because it takes that top level out. So a prime example of cooperation across countries, albeit with the Spanish language being in common. But I can point to numbers of these around capital as well as reinsurance. So they do cooperate particularly well within our membership group.
Did you want to add something?
Yeah, just to add a very quick point I should have said. Across the globe, we have the International Cooperative Alliance has 8 or 9 global business sectors where businesses from a particular sector can meet. ICMIF is the biggest and the best, the most professional.
Thank you.
Frankly. But we also have it in housing. The consumer cooperatives, which was the group that was meeting in Manchester, is also growing in significance and size. We have it in banking. We have a new one in energy, because the retailing, production and distribution of energy through cooperatives is becoming more and more common across the world. So in all these business sectors and others, agriculture is another one, fisheries is another one, where our businesses across the world come together in these global networks.
Very good. Thank you. Sir.
Hi, David McKibben. Very
a little bit closer to your mouth and slightly...
Okay.
That's it.
David McKibben, thanks very much. Very interesting talk. My background is I was a catastrophe underwriter for 25 years at AIG. I now do my own thing, and I'm fascinated by the talk of expected losses, which I think for the last 30 years or so in finance, we have tended to outsource responsibility, outsource risk management to third parties. And what we're seeing now is more and more retained risk. Companies are having to, and people are having to retain more risk. So I'm very interested in the idea of risk management to preemptively anticipate social costs, contingent liabilities, in other words. And I'm wondering, and I know of one big mutual recently, a mutual organisation that is bonded, who is putting if you like, a self-retained insurance layer between it and the senior secured debt holders. And I'm wondering, therefore, coming to your point about bonds, whether there is any link between the mutual and social impact bonds, which are being discussed hugely in governments. And, of course, you mentioned the behavioural insight team at number 10 Downing Street. I think these are all very important issues and a very strong case to be made for the mutual, for the benefits of society, of an insurance type approach, a socially useful finance, essentially.
As I understand, the principle of that is that somebody invests in a bond and takes the risk of social change, either producing good results or producing no results.
Absolutely. I think the idea is over a period of time, there is obviously a degree of retained risk by the organisation, but there is a belief that social savings can be made through managing behaviour, improved involvement at an early stage with, for want of a better word, people who are going to fall off the path. And I
but it could mean that only the investors benefit, yes?
Sorry?
It could mean that only the investors benefit, which isn't very mutual.
Well, no, hold on. If society is lowering the costs of those social interventions, then society is also benefiting as well.
Paul, do you want to comment on that?
Yeah, this is a very difficult one. In the example that I've given you in Mast, we've had to find the people with the most interest in getting a result. That's effectively what's happened. And the people with the biggest interest, actually, are the people who are losing money. And those people who are losing money are the housing associations. So we're doing it that way, and it's in their interest to risk manage the thing, and they're best placed to do it. After all, they house these people. They have to house them in most cases. They're told by the local authority who they've got to take. And so they take all sorts. And of course, that means they've got people who have problems. So if they can manage those problems to their advantage, that actually saves them money. It also gets these families back to work or back on the rung, and has all these other benefits. But it's primarily the people who've got the interest, the financial interest, that have got to do it. And expecting third parties to do things for other people, I don't think it works. I think that's to me, it's an issue, particularly in a risk-bearing mutual. It can be different with other forms of mutual.
A couple more points, I think. Sir, over here. And then perhaps also over here.
Good evening, Robin Swindell. Do the panel feel that regulation here in the UK is overly hindering the development of mutuals? And if so, is that something we should address politically, or should the movement seek to find ways to work around?
Shall I start that one?
Nice, quick, pithy answers.
Yes, there is no difference between, for the regulator point of view, from a mutual or a stock company in terms of insurance. We wouldn't want any difference. We want to be treated the same. That said, it is very difficult to set a new one up, as Paul will allude to, but we are seeing them set up, and the market finds a way to do it, which is what effectively Paul is doing.
Yes, I mean, we're using the discretionary model precisely because it's virtually impossible to set up a new, fully authorized, regulated mutual. It just isn't going to happen. And the discretionary model is great because there's no regulation, and that's the law, and it's enshrined in the FSA handbook. However, that puts an even greater burden on us to run it properly, to structure it properly, make sure there's no misrepresentation about whether it's insurance or not, etc. Make sure that the excess and aggregate protections are in place, and we use a partnership. As I say, we use the capital, substitute capital from the insurance market. We buy it in from the insurance market. So it's a good partnership from that point of view. And that, at the moment, works very well. If there was no reinsurance available, we'd have to do it all ourselves and generate our own capacity, in which case that discretionary model, and thank goodness you've got it there, because otherwise there'd be no possibility of bearing risk.
A final comment over here.
Dominic Pinto. I mean, yes, very fascinating so far. One observation would be that I suppose if which might be a sort of form of heresy in the City of London, if there was a financial collapse, it really wouldn't be the value of your credit or money which would actually have anything really of any relevance. It would be probably groups which would be the mutual groups, possibly the churches, who would actually carry things on. But that's aside from that. I mean, I think that's the observation I have is that having been on the board of a housing association, which is a form of mutual, although the only members, of course, were the members of the board. If you like, the residents, the tenants weren't members, but we were looking at ways of trying to form that glue, trying to address some of those problems. And I thought a cooperative approach, having been a member of various co-ops for a long time, might be one worth looking at. It's unfortunate, I don't think that, if you like, in the sense the nature of the industry is conservative, and looking at those alternative forms is just not something that they were prepared to go to. But looking at others, I mean, the mutuality of, say, the Nationwide Building Society or the Cooperative Bank Group is at one level. And frankly, I don't see their behaviour in terms of their members or perhaps their customers as being really any different from any other financial services company. It's a small scale, I think, which is where it works.
Is that a question?
Yes.
It's in what way, really, are the cooperative banking and financial services different from others?
Well, I thought the question was, the comments you were making was slightly different to that as well, because you were making the case that in the context of a financial collapse, actually who is going to do the business? And what's very interesting, we were talking about it just before the beginning of this debate. If you look at what's happening in parts of Greece and Spain, there is a sort of collective mutuality going on with people supporting each other at all sorts of informal levels across the society. So immediately people turn to, as we've seen with the financial collapse, the people have been turning back to mutuality. There was the big changeover day in North America where Canadians and US citizens were advised and supported through a viral campaign on social media to change their bank accounts from the commercial banks, the investor-led banks, to cooperatives and credit unions. And tens and tens and tens of thousands did it on the 5th of November last year. Really, these are the sort of things that are beginning to happen. So you can see the way people have returned to a greater understanding of something they'd never really forgotten. But at the time, the most rabid capitalist period in our life, people were going for the quick buck because that's what everybody was told to do and they could do. So I think you're right that people are returning to an understanding of mutuality and collective action that will support people through times of crisis.
But are the cooperative banks any different from any others?
Well, I think they are. I think they are because they have a different set of... firstly, of course, they help very much. They have strong influence and accounts and whatever within the social enterprise sector. So they're supporting the growth of our sort of businesses and mutual businesses, community businesses across the country in ways that others haven't been. And they've also, of course, not collapsed. So they're still lending. They've been lending throughout the crisis. All across the world that's happened in a way that the commercial banks have not been able to sustain.
And as you will know, the Cooperative Bank is about to buy a large portion of branches of Lloyd's TSB. So they're going to go from 350 branches to 1,000 branches in the near future. That's pretty big growth. There you go. The only AAA rated bank left in the world is Rabobank, which is the Dutch one, which is a cooperative. So you can go to Desjardins in Canada, and they're actively growing their business. The one that Pauline referred to is Bank Transfer Day, set up by an individual from California. She decided it was wrong. We needed more community banks. So just on the back of social media, she's now moved 6 million people have changed their bank accounts in a year. That's 500,000 a month are moving from a corporate bank to a credit union.
Paul, a final comment.
Well, I'll just pick up the last point about size, and it is about glue. If you're particularly in a risk-bearing environment, if you're bearing risk, you've got to be incredibly particular about who you're sharing risk with. And so from that point of view, I have some sympathy with what you said, but of course, when you're doing all sorts of other things, you need the size. So, so long as the cooperative ideals are there, then you've got to compare it, not with some, absolute. You've got to compare it with what else is available, and actually, it's far better, far better. But I agree with you on risk-bearing side. Size isn't so important. It's about the glue between and the identification between the members, that the members can identify with one another and they're happy to pool risk with one another.
Thank you very much. We've had a thoroughly interesting evening. Pauline, Shaun and Paul, you've contributed with enormous dedication, with great detail and with considerable verve. And we're very much in your debt. Thank you very much indeed.
No, thank you.
Thank you.